Hey, Peter, let's get right into it. We've had multiple conversations in the past. You've taught me so much. I think you can teach so much to my audience about how Bitcoin works, what Bitcoin is. You have this great background in finance. You've been working in finance for 25 years, but you have this great background. But we were talking right before this call, and you mentioned something. You're going to sell your house. Why?
From a financial perspective, owning a property in Sydney anyway does not look like a good investment.
Yeah.
Now, when you dig into owning a property from Australia and the tax setup that we have here, one of the greatest investments that you can make is in Australia, in your own home, for many reasons. Firstly, it's been a great asset class. It appreciates at a staggering clip. It allows for very favourable financing, so you get arguably the cheapest interest rate on financing it. You can leverage the home quite heavily to the tune of 80, 90%, in some cases 95% borrowing on it. And most importantly, the bank, as long as you meet the repayments on that property, on that loan, they will never take that property from you. So there's no mark to market, there's no revaluing the property and having the property taken from you because the valuation drops. The final kicker to that as to why it's such a wonderful asset class and why Australians are obsessed with their homes and property is that if you sell the property and then go buy another one, it's capital gains tax free. So it's very difficult to outrun a tax structure when you've got an asset class, i.e., albeit a home. And I know every guy listening there to this call will say, "Oh, your home's not an investment." I get it, but to have tax-free capital gains on arguably an asset class, which is your home, is really hard to beat. And when you compound returns through time without having to pay capital gains tax, that allows you to leapfrog much faster than just about any other way.
Yeah. Okay. So you sold your house because of this specifically. So you laid out all the advantages. What are you going to do with the money? Why don't you want to own a house? Why is it that you want to get rid of it?
Well, as good as those advantages are, I actually think in some capacity, and I understand that the internet is forever, so we'll be having a lot of people dunking on me, 10, 15, 20 years into the future. But I think at this point in time, the cycle, we've got interest rates at previous highs, like 5% plus. If you want to borrow a mortgage in Australia, it's going to be 5 to 7%, depending on if you get an introductory honeymoon rate or not. We've got a maxed out credit system where it's very difficult to gain credit now. And if you look at the primary drivers of capital growth, which is where most of the returns come from in property, that's driven by credit expansion. And we've got, in real terms, a credit contraction. Basically, everyone is up to their eyeballs in debt, and it's very difficult to fit, more debt when you're up to your eyeballs in it. If you haven't got any debt and there's low levels of debt across, personal, corporate, and government, then it's easy to take on debt. But corporations, personal, and companies, as well as government, are all up to their eyeballs in debt. So the ability to create debt is going to be very difficult moving forward. And so I look at the outcome and I think the odds are skewed against me in the property market relative to other opportunities that are out there. And long story short, I look at Bitcoin relative to Australian property, particularly where I live, and think there is far more opportunity in Bitcoin than there is in the Australian property market.
So do you think the real estate market is? I don't know. I personally think that it's about to collapse. I think that there's going to be something that's going to happen that people already can't borrow money against they can't borrow money to buy real estate. They can't afford the payments. Newer generations can't afford a house at all. So do you think that over the next few decades, do you think real estate is going to underperform compared to like right now? If you have leverage, you can probably outperform the S&P 500 with real estate. Would you agree with that?
Yes.
Yeah. So do you think over the next few years that's going to happen, or where do you think this is going?
This is a really tough question, and let me give some context to it.
Right.
I really find it very difficult to bet against property and Australian property and Canadian, American property. And if you just have a look, and this is in differing arrays in different countries, but in Australia, everyone is in the bag for property. So it's very difficult to bet against it because huge amount of government revenues come from property taxes, land taxes, and stamp duties on sale of properties. You've got a huge amount of capital gains on investment properties that are sold. You have the banks, which in Australia, the banks and property REITs probably account for somewhere between 50 to 60% of the entire Australian stock exchange. Like, it's just insane. The whole country is focused on getting that number to go up for property. Yeah. And so you've got realestate.com, which is a realtor's website, which is one of our superstars in an international capacity globally. Everyone is in the bag. The government's in the bag. The corporations are in the bag. The media's in the bag. And guess what? Everyone's, well, for the majority of Australians, their largest single asset that they hold is their home. How do you bet against that? It's really, really hard to bet against it when everyone has a vested interest in achieving the outcome of number go up for that asset.
Yeah. But you're doing it. So the way that I see it, I think you're doing it because, so actually you explain why do you think Bitcoin is going to outperform a real estate? Why, just basically, you can orange pill my audience here. Why do you think Bitcoin is going to outperform real estate? Why is that?
I think it's digital real estate, in short.
Okay.
Except this Bitcoin, which is digital real estate, there are 8 billion people who can benefit from it and access it.
Yeah.
However, the Australian property market, there's only, call it 15 million people, despite a population of 25 million. There's only 15 million people who can actually buy Australian property at this point in time. Now, if I look at Bitcoin and weigh that up relative to what it is from a real estate lens, I look at this and think, well, there's 16 million people in Australia. We're importing 1 million people a year, which will drive up price. However, 16 million people have a home and they don't need another one. And if you compare just that statistic alone relative to Bitcoin at best would have 200 million people globally using it, but there are 8 billion people who need it and will want it. And so I look at this and think, in Australia, we've got a 100% saturation rate of people who want a property and people who have a property. Whereas in Bitcoin terms, we haven't achieved 0.25% not even 1% of the outcome that can be achieved. So if Bitcoin was this digital piece of land, an imaginary land, less than 1% of the population is already there. And we know that everyone on Earth is going to get there at some point in time. And this is where, I'm incredibly humbled to be sitting here chatting to you and getting the opportunity to do that, both on and off air, because I learn so much when we catch up. But I look at that and think, well, you know it, I know it. But maybe that information asymmetry isn't evenly spread across the market. And this is where that whole idea of efficient market hypothesis, I find I don't even know how someone came up with that, because that is never a thing. And particularly when it comes to Bitcoin, we know that I've never seen a surer thing than what I just mentioned there, which is 8 billion people need it. And at the moment, only 200 million people even grasp the magnitude of what that is yet. I don't think any of us do.
So I don't agree with that. I think maybe 200 million people own it, but I don't think 200 million people understand it. I think there's barely, I would say maybe even under 1 million people who truly understand how Bitcoin works.
I'd agree with that. And so that only adds further weight to that example.
Yeah. Yeah. And you're really well known for this idea. And I love this idea. I've spoken to you so many times, and this has stood out to me over the last maybe 15, 20 chats that we've had. You say that Bitcoin is a triple point asset. Yeah. Can you explain that? Can you explain that for my audience? I think that's so important. When you said that to me, it blew my mind, because it kind of connected the dots on store of value, medium of exchange, unit of account.
Yeah, it's a mind-blowing concept, and this is where to talk about the triple point asset, what we're talking about is the three functions of money. You have store of value, medium of exchange, unit of account. If I look at store of value, we typically think of store of value as being gold bars. However, with the corruption of the money, we really have the stock market and real estate being stores of value in some capacity. But for simple terms, I just call it the gold market. That's the store of value where you put long-term wealth that won't be eroded by inflation and debasement. Then there's the medium of exchange, which is how we actually pay for goods and services, how we conduct our trade. If we look globally across the world, 83% of global trade is conducted in US dollars. So the US dollar is the global reserve currency for all intents and purposes. And the total amount of medium of exchange, roughly, in this world is around $100 trillion, of which the US accounts for most of that. Then you have unit of account. So how do we denominate? How do we calculate? And obviously with your CFA background, I've got a background in accounting. Much to the degree, I do not like accounting one bit, but what has come out of Bitcoin is a unit of account, which is, it's just superior in every way, shape or form to the existing system of unit of account, which we have, which is basically US dollar / double entry ledger system. And if I can go through what's really unique about Bitcoin from this perspective is that those three functions of money through time have had a separate champion for each of those functions. So up until Bitcoin, or up until property was put in front of it, you had gold as the number one store of value through time for the last 5,000 years. The Egyptians held it as a store of value. The Romans held it as a store of value. Middle Ages held it as a store of value, and we hold it as a store of value today. So through time, gold was always a way to store value. That's been the best up until now with Bitcoin. And now why Bitcoin is superior to gold in holding that is that Bitcoin does everything that gold does. However, you can teleport it. That is a huge advantage to it. You can also hide it. So it's seizure resistant. If you put 24 words in your head, you can literally walk around with however much Bitcoin you've got in your head. No one knows how much you've got. And if you pass out, roll over, don't wake up tomorrow, that Bitcoin dies with you. So there's no way to extract that from the network. This is the first time on earth that we've got a store of value that you, if you wish, you can protect even if you're held at gunpoint. There's no way for that person to get that money from you. Whereas up with every other asset, every other store of value, what would happen is wars, theft, you name it, it's usually done through violence. Walk in, hold a gun to someone's head, give me what you've got, you hand over a gold bar, thank you very much, please don't kill me. However, with Bitcoin, they can hold a gun to your head and you say, I'm not going to do it, shoot. Now they have a choice. All of a sudden, they can kill you, go to jail for murder. They don't have any gold, they don't have any wealth, they don't have any Bitcoin from you. Or there's a negotiation. So I look at this and think that's really quite a unique thing about store of value. You've got seizure resistance, and then the big thing that I look at with store of value that's never existed before is you have absolute digital scarcity with this store of value. Now, to put this in perspective, gold's been the best store of value for the last 5,000 years, but we have an inflation rate with gold at 2% per annum. So to put this into perspective and the power of compounding, what's really interesting is that the entire amount of gold that existed in the year 1850, we now mine all of that gold that was created throughout history in one single year this year.
Wow.
That's the power of compounding at 2%. Now, if you look at Bitcoin, Bitcoin has zero inflation to it. So there is no debasement, there is no inflation. And so that to me represents a superior store of value than we have with gold.
And
Big
a lot
change.
of people like to say, oh, Bitcoin has inflation, the supply is increasing, but I don't think they quite understand that we're not buying Bitcoin based on the current circulating supply. We're buying it based on the knowledge that there's going to be 21 million. And that's something that people can't seem to wrap their heads around. To me, it doesn't matter if there's going to be however many coins released to the public over the next, let's say, 120 years. I don't care about that. I already know that 21 million is my denominator. And that's the key here. Do you think that, okay, actually, I want to show you a graphic here. This is a graphic from Jesse Myers, I think his name is. Jesse Myers. So you've probably seen this before. Great content. His graphic was actually used by Michael Saylor in one of his presentations. So that's pretty cool. So what do you think out of all of these? I think Michael Saylor had his own prediction. He said something like $260 trillion for Bitcoin in 20 years. So what do you think out of these Bitcoin can take over? What are your predictions for the percentage of this total global asset value. So right now it's at 900 trillion. Let's say we stay at 900 trillion. We don't account for inflation. We account for inflation. So we're using inflation adjusted numbers here. So what do you think Bitcoin's market cap will be in 20, or actually let's say 10 years? And
I
what do you
think
think it'll take over?
I think it will be 130 times bigger. Well, I think it'd be close to 130 times, 150 times bigger than what it is now.
Wow.
So that would be a market cap of 100 to 150. So it would probably assume the gold market, assume the art market, cars and collectibles, and it would most likely take out equities as well.
Oh, you think it'll
That would be
completely
my
take out equities?
expectation in the next 10 years, yeah. Now, equities will still exist. I don't want to sort of scare anyone into thinking that equities are going to be devalued. On the contrary, what I think is going to happen is rather than Bitcoin taking assets away from certain sectors, which I think will be true in some respect, what I actually think will happen is that the pie will grow exponentially larger. So all that will happen is Bitcoin will assume $150 trillion worth of global value. However, the market, there's roughly $1 trillion there, presumably, is the number, give or take. But I'm saying Bitcoin will grow that pie by $150 trillion from $1 trillion to $1.2 trillion, roughly. So it won't really affect the values of real estate, won't affect the values of bonds, money, equities. What will happen is Bitcoin will just grow into a much larger component of a bigger system.
I see your point. I see what you're saying there. I see where you see it's going. But I do think that it's going to take over part of bonds. It's going to take over part of real estate. Like right now, based on what you were saying in the beginning of this conversation, you were saying how you're going to sell your house to buy Bitcoin and MicroStrategy.
Mm-hmm.
I think there's going to be a lot of people who do that. And that sell pressure is going to bring down the value of real estate as a whole. What would you say to that?
Depends how quick they can debase the dollar.
Okay. So
that's the fundamental driver.
Yeah.
I think they're just going to debase the money. They'll lower interest rates. There's 1,000 tricks they can do to preserve the value of all of those assets. So I look at that and think the number one way they can do that is debasement, print money, and that's what they're doing now. So I look at that and think that makes it all the more important for you to buy more Bitcoin, because that's the only thing that's not getting debased by 7 to 10% per annum.
Yeah, 7 to 10%. I think it's even higher than that. I think it's because we also have Jeff Booth's side of things where he says the price of tomorrow. In the price of tomorrow, he says life should be getting cheaper. The natural state of things is deflationary, right? And I know you talk about this. You've explained this before, like in other podcasts. I feel like that's so important to understand. Once I wrapped my head around that, once I actually dove deep into that, it made me think, wow, this is going to change everything.
Yeah, it does. But the sad part is it requires study and attention. And I look at your involvement in Bitcoin and evolution of it, and mine is very similar to yours. There's not a day goes by that I'm not learning more about this and thinking, oh my goodness, did I think of this iteration or that iteration? And one thing I actually want to talk to you about, because I think there's probably a few people better placed on earth than you to talk about this, is the bond issuance, convertible notes from MicroStrategy. Now, they're effectively backed by Bitcoin. But what I find really fascinating is that they're issued at a total interest rate of about 0.8%. And what I find terrifying and very amusing at the same time, you've got the Federal Reserve, the risk-free institution on earth, issuing immediate money at how much?
Is it 5.5 something?
5 point something.
Yeah.
So what you're telling me is that MicroStrategy issuing their convertible bonds at a 0.8% interest rate is a 400 or 500% better bet by the Federal Reserve bonds that are the risk-free rate of the world. Think about that for a concept. And that is market. That's what the market says. That's not what, a fancy, lecturer says.
That's huge. I think I actually want to get into MicroStrategy with you as well. So a lot of people think that MicroStrategy has this crazy net asset value multiple, and it can't go higher. But I think it can. Because I think the reason why MicroStrategy is being valued so high, of course, the debt the debt is the risk-free rate with MicroStrategy is lower than the risk-free rate with the Fed. So I guess MicroStrategy is the new risk-free institution, company, whatever you want to say it. But with the net asset value premium, people are so confused about why it keeps going up.
Yeah.
Have you looked into that? Have you thought of that? Have you
I've spent a
given
lot
that
of
some?
time thinking about it,
Yeah.
and what I'm about to say is going to upset a lot of people.
Okay.
I
Okay.
don't
Say
even
it.
think that NAV started, that disparity has started.
Ah. Okay.
I think it's going to go a lot higher, like a
Yeah.
lot higher. And if you look at it on a PE multiple perspective, it can go a lot higher. If you look at it from
Yeah.
a NAV perspective, it can go a lot higher. And if you look at it in traditional finance terms, what you're trying to do is basically calculate what the future value of the investment's going to be. And
Yes.
in really simple terms, a different way of looking at it, which I haven't heard anyone else talk about this, but it's food for thought, something to ponder, is I look at the market cap to NAV. So MNAV is trading at a 3 times multiple. What is that really telling us? Now, my expectation is that Bitcoin will go up somewhere between 3 and 10x in the next 18 months. Now,
Okay.
what I think that MNAV is telling the market is you get to buy basically next year's price of Bitcoin now. So it's really only 12 months of profit for MicroStrategy because the profit is going to be built out in the next 12 months and it's going to have a 3x appreciation in Bitcoin, which means your 14 is going to grow to 45, which is what the current market cap is, give or take.
Yeah.
So I really think you're only paying 1 year's multiple right now.
Yeah. And to me, I think what I see that I see that I think that's very special. The fact that people are basically giving a future value to MicroStrategy at a higher. They think that MicroStrategy will outperform Bitcoin. I think. Do you agree? Do you think that that's
Yeah, I
accurate?
do.
Yeah.
Yeah, I do.
Okay. So
And the pressures, though, on that are caused by a multitude of things. And Bitcoin is very difficult to buy. It's still not easy. There's a whole host of rules and regulations. There's choke point 2.0, which is limiting the amount of capital that can go to the market, or people can send money to their stock exchange and buy Bitcoin. It's easy. And so it's capturing a lot of capital that otherwise would not be able to buy Bitcoin itself. And so there's a premium that's paid for that ease and convenience like anything else.
And I think there's also the fact that MicroStrategy holds so much Bitcoin, and I don't think anybody else is going to ever be able to do that. They kind of have, if they were to become a Bitcoin bank, in a way, they have the law of numbers working for them, right? Because they can give out so many small loans or whatever size loans as they want to, and if they charge any interest rate, let's say, what do you think the rate of interest is going to be for lending in 15 years when Bitcoin is pretty integrated in society? What do you think the interest rate is going to be? What yield do you think MicroStrategy will be able to generate on lending its Bitcoin, if it does?
I think it's going to be GDP plus probably 10%.
Wow.
I think it's got to be because you've got to over collateralize the loan.
Yeah.
So the reason why we can have really compressed rates globally on credit is because of fractional reserve banking.
Yeah.
So the banks basically get to issue 20x the amount of equity that they hold for a home loan. So when you can issue or create out of thin air 20 times the amount of credit, you can have razor thin margins, which allows you to lower the price of the credit. But when you've got the Bitcoin banking system where you've got to over collateralize the lending, basically, if you want to borrow 100, you've got to put up 200 of capital, then that totally wipes out the ability to compress the cost of credit. And it expands the cost of credit because there's also a cost to holding that buffer of collateral that you need to hold so that you don't get liquidated. So to me, I actually think the rates are going to go out dramatically. However, we're going to go through a short period of time where there's going to be someone really smart figure out, hang on a sec, what happens if we classify Bitcoin as a currency, put it on our balance sheet, which you now see Bank of New York Mellon, BNY Mellon, allows you to do this. They're going to build this out, and what they're going to do is they're going to put that on their balance sheet, and that's going to allow them to have 20x the credit because they can leverage the credit against it.
Wow.
And to me, what I think is going to happen in a very short window of time, in the full spectrum of like thousands of years, we're going to have this crossover period in fiat where they're going to do fractional lending on Bitcoin and they're going to pay you to borrow money from them.
Wow.
Yes,
How
I know.
how would that work? How would they pay you to wait? So they're gonna lend you Bitcoin, or are they gonna lend you fiat?
They're going to lend you fiat.
Fiat. Okay.
And say you put up, call it $1 million worth of Bitcoin.
Yeah.
They're going to loan you $100,000 or $200,000, and they're going to pay you somewhere between 5 to 10% interest on that money to borrow money from them. And it's like, how does that work? It breaks finance. But if you look at the global banking system, that $1 million that you give them that puts it on the balance sheet allows them to go and leverage that 20 times to lend out $20 million. Now, if they're getting a 2% differential on that $20 million, they're making roughly, $400,000 in interest.
Yeah.
So they can afford to pay you $10,000 to give them the capital to let them go and do that.
Right.
So they are effectively giving you a profit share in the lending.
Yeah. So don't you think that this is gonna blow up the legacy markets? I like the way that I see it. There's gonna be, we know that Bitcoin is going up forever. We know it's going to. I was actually talking to my wife yesterday, and she just looked at her. She looked at her app, and she's like, "Hey, you were right. Bitcoin is at $100,000. It's Canadian dollars." So I was thinking, yeah, it's gonna. And I told her it's going to 1 million. It's going to 10 million. It's going to 100 million. It's going to keep rising. But what that means is that the current system is going to keep being devalued. So if people are able to lend their Bitcoin, if they're able to give their Bitcoin to banks as collateral, what that means is that there's going to be so much money in the system, and it'll just keep growing and growing and growing. Where is this going? Don't you think this is going to completely just destroy the legacy markets?
Before it destroys it, it's going to absolutely explode the credit markets.
Yes.
So not destructively, but volume-wise, it's going to grow dramatically. And what I see happening is, if you look at all of the asset classes across the globe, the fastest growing asset classes are the ones that had credit attached to them. So look at residential property from the 80s through to now. That is arguably the greatest asset accretion value accretion in the last 40 years out of any asset class is that. Now, why did that happen? If you can demonstrably prove that the credit analysis, the credit requirements for borrowing money on residential real estate have been deteriorated through time. An example of this is in the 1970s, and this sounds awful, but this is just the fact of the matter. In the 1970s, women weren't allowed to borrow from the bank if they didn't have a husband and a wife and a job and everything else, because the banks looked at that and thought that was a credit risk, because what happens if she gets married, has children, leaves the workforce? Now, I understand how crazy and backward that sounds, but that's where the credit system was 40 to 45 years ago. Fast forward to now, you practically, and to make light of the GFC, you didn't even need a job to get a home loan. You know, the no income, no job applicants, the ninja loans. You didn't need that. So the credit quality credit scrutiny has deteriorated dramatically in the last 50 years. And what has that done? That's allowed more and more people to access credit and buy properties. And this is why we're sitting on a 50x in property market since 1975.
Yeah, and I think part of that is just to not hurt people's feelings, to give people 3.5% down payment loans because they don't want people to feel like, oh, they're left out. But the reason they're giving out these loans, and that's the reason why they're left out. Like that's why they can't buy a property. That's why they but then that's the thing, exactly what you're saying, because you can just because real estate has been monetized, because we can use it as essentially money. Back to the triple point asset point that you were making. So because we can use real estate as money, we don't need to use dollars as a store of value. So this means that because real estate has been monetized, now we can create as many dollars as we want to buy real estate, and it just breaks the entire thing. And most people, keep in mind, most people have no idea what they're doing with their dollars. Most people just save in dollars. So I used to work as a financial services advisor, and there were people who had hundreds of thousands of dollars sitting in their bank accounts because they had no idea what's happening, right? And that was their savings for retirement. By the time they get to retirement, it's like, oh, this money only covers me for 3 to 5 years. And
Yes.
that's the situation that we're, because housing has been monetized. And I think that's, once you connect the dots there, it's there's no way that it won't blow your mind. Like, there's no way, because if you really think about it, the entire thing is designed to keep housing prices going up, up, up.
Correct. And that's the really disappointing thing. But the good news is it's really easy to change that. And I'll give you one policy which I would love if anyone can get this to the Bitcoin Policy Institute boys in the US, any other country want to take it, please get this idea to market, because I think it's really important. But if I look at the US system, and one of the largest sectors of property in the US is the multifamily real estate sector, it accounts from memory circa 40% of the property market.
Wow.
And I look at this and think, why has this been so successful? If you look at it, it's been really successful because there's capital gains tax rollover relief if you roll from one multifamily property to the next. And so what that allows people to do is that allows people to compound results through time without having their equity eroded through capital gains tax. And this is why you've got so much investment in multifamily, arguably an oversupply in that, but everyone's trying to take advantage of putting that money through time without capital gains eroding it. What if, with the stroke of a pen, you could allow people to roll over from a multifamily 1031 into Bitcoin with no CGT?
That's massive.
All of a sudden, you would achieve two things. You would, firstly, it'd be great for Bitcoin because you would have arguably hundreds of billions, if not trillions of dollars a year flowing into Bitcoin, jacking the price up. But at the same time, you would hit the deflation button on the cost of housing in the US. So you would dramatically reduce the cost of housing because the infrastructure is being built. All of a sudden, you would have all of those huge property REITs, real estate investment trusts who are invested in multifamily. They want to be invested in Bitcoin, but they can't be because they don't have a product that allows you to do it. Now imagine the US government gave the stroke of approval to say, we'll extend rollover relief to roll any asset into Bitcoin. Now, all of a sudden, this is possible if, say, Trump's team, and they're all Bitcoiners in that team, if they hear that, think it's a great idea, and it serves two purposes. Well, multiple purposes, but the main purpose is it's going to deflate the cost of housing, dramatically reduce it, which is a wonderful thing, and it's very deflationary. It's excellent for mums and dads and families. At the same time, it's going to pump a lot of capital into Bitcoin, and most importantly, it's going to allow the fund managers and all the property guys to keep their way of living. So they're not going to, really, I guess, kill the idea, because they're going to be able to take that fund, roll it into Bitcoin, and they're going to be able to do what Michael Saylor's done and clip the same sort of fees on that, except on an asset growing at 50% per annum rather than their multifamily office growing at 10 to 20. So for me, it's a no-brainer and everyone wins.
Yeah, absolutely. I think that's so do you think that the reason why they're not doing that already is that they don't understand Bitcoin, or what do you think? Because I feel like there's so many layers here. There's so many things that you have to learn before you can actually do something like this. And that's what makes Bitcoin so difficult to understand.
True. I just think my humble beginnings, it took me 5 years to figure out before I got comfortable buying it. So I don't know if I'm the person to be asking about that, because I'm a very slow learner. But I look at and I think, this is where I'm very grateful for the work that you do, the messaging you deliver, and all of the other podcasters out there, educators, authors, basically pouring their heart and soul into content to putting another spin on this obscure little thing called Bitcoin, because you never know what message is going to hit. Like, we all try and orange pill people, but it's funny. There's a Bible verse which basically says a prophet has no honor in his hometown. And I don't know if you've suffered this fate, but those around you typically don't listen to the message that you're delivering on Bitcoin. And then they'll come to you 6 months or 12 months or 5 years after the fact that you told them to do it. And you might have been talking to them daily about it. And then they'll say, I watched a video with Rajat. He just nailed it. I totally get Bitcoin now. And you think, how did I miss that? And what was the little thing that just fell into place that made it all fit? So
Yeah.
Yeah.
Yeah, that's the power of this, right? I mean, in the old system, I feel like uh the knowledge was kind of not even intentionally, it's because we didn't have the internet then, but the knowledge was kept under wraps for the people who are wealthy and the people who have the networks, the people who have their MBAs, people who work on Wall Street. They're the ones who have the knowledge to be able to invest and save and actually just build a wealth for the future. But I feel like with Bitcoin, now everybody has access to that, right? Would you agree? Would you agree that everybody can do this? Like anybody can be a Bitcoiner, right? I mean, everybody is a Bitcoiner. They just don't know it yet.
That's how I feel. I think if people truly understood, if there were the million zealots and the understanding and information that they know was extended to 8 billion people, Bitcoin would not be in the millions. It would be in the billions of dollars per coin. And
Yeah.
this is where it's just a lack of awareness or understanding as to what this asset really is. And it is very difficult to understand because it's quite surreal. It's not tangible. It's not like a
Yeah.
property where it's bricks and mortar. You can touch it. It's not like a stock that's got a cash flow to it. So you can evaluate exactly to the decimal place what you think it's worth. It's this weird concept that to me represents hope and opportunity. But understanding how the monetary system works, understanding all of the other investments that are out there, where I choose to spend my time is staring at Bitcoin because I think it's got the largest opportunity to move the needle from a societal perspective, and I think it's fundamentally baked in for the price to go up through time.
Yeah, and I feel like I think that you actually explained this really well. I feel like the incentives are perfectly aligned to make it so that everybody can benefit from Bitcoin, and everybody who owns it will eventually benefit from it. Can you explain your thoughts on that? I know you've done a lot of work on the incentives, so I think that would be perfect from you.
Yeah. I think to me, Bitcoin represents a perfect incentive system. And what do I mean by that? In that every market participant in the Bitcoin ecosystem is incentivized to do the best for Bitcoin, so to speak.
Yeah.
And this is the first time in history that I'm aware of that one piece of technology has the ability to align incentives, not just for one person, but for 8 billion people. And if we look at,
Yeah.
and forgive me for sort of talking really crassly on what is a very sensitive subject to most or some, but if we look at religion has been the most effective incentive structure that we've seen to align people's interests. If I look at the most successful religion on earth, forgive me if I get this right or wrong, I might be a few hundred million out, but I think it's Christianity with over 2 billion people on the globe, who subscribe to that faith. That's one of 5,000 different faiths. That is the most successful incentive system that we've seen. Now, I don't want to degrade religion to an incentive system, but that's what we've got. Here is Bitcoin that has the ability to incentivize 8 billion people.
Yeah.
Every single person on earth is going to be better off. And every single person on earth is going to work for the betterment of Bitcoin, because Bitcoin is the first asset, first technology, first whatever you want to call it, that is not a zero-sum game. So in finance, if we're talking about options or stocks, what have you, I sell a stock, you buy a stock. I've won, you've lost, there's a trade. Someone's won, someone's lost. With Bitcoin, that's not the case. You can all hold Bitcoin and you can all benefit from its value accretion. And this is where what's really interesting, if you look at, and back to economics, if you look at what Bitcoin is and where we are in the world from a debt perspective, everyone says we've got a debt problem. But what we really have is a collateral problem. We just don't have enough collateral. We don't have enough assets to really quantify the debt. So if our assets were 10 trillion and our debt was globally 300 trillion, that's a 3% debt ratio. That's no problem at all. But when it's 100, we've got a problem. Or when it's 50-50, we've got a problem. The reason why I talk about that is because Bitcoin is the fastest way to create collateral, to create equity for the next system. And so a dollar poured into the Bitcoin ecosystem, I think, in time will increase the equity by 100. So you pour $1 in, you get $100 in equity out of it. And if we've got an equity/collateral problem, Bitcoin's the fastest way to solve that. And it's the most egalitarian out of any.
Can you explain that? So if you if you put $1 into Bitcoin, you get back $100 in equity. Can you go deeper into that?
Or market cap, I should say. I'll classify that. So you buy $1 of Bitcoin, and that will increase the market cap by $100 roughly. And that's all to do with demand supply. So if I was to do that with the stock market, I put $1 in, I might only increase the value total market cap by maybe $1.50. So it's not very effective. I've only got a 50% increase. Whereas if I put $1 into Bitcoin, I get a 10,000% return on my money. Whereas if I put $1 into stocks, I get maybe a 50% return. If I put it into property, I might get a 75% return. I look at this, and if we've got to create collateral to even up the balance sheet, so to speak, the fastest and cheapest, most efficient way to do that is to be putting dollars into the Bitcoin ecosystem, because that will run the hardest and fastest.
And anyone can do it. So the fact that you can put pennies into Bitcoin, you can buy individual Satoshis if you want to, right? So if somebody from Nigeria, they want to exchange their Naira, 1 Naira can't even buy a Satoshi at this point. So if you wanted to give away your Naira and you wanted to buy Bitcoin, you can still do that. But that's my point here is that everybody can put every little penny, the smallest amount of money that they can find, they can put it into Bitcoin. And I think that's what just pushes the value up so much higher. Because with real estate, think about how many people are locked out. So many people can't buy real estate. They can't buy stocks because half the world doesn't even have access to Swift. Right?
Yes. Here's something really interesting to think about. You look at who's accreted more wealth than anyone in the last 20 or 30 years. Two people for me come to mind: Jeff Bezos, Elon Musk. Our number one, number two wealthiest people on earth. What have they done? They have invested in their own company, a technology company that's listed on the NASDAQ, and they have reinvested anything that they could back into that company. They've taken no cash out of it, and they've let time do the compounding for them.
Yeah.
Now, what I look at, and to your point about being in Nigeria, you can basically invest in Bitcoin and do that. Bitcoin represents to me the best technology stock that was ever invented, and anyone on earth can invest in it. And it's going to go up as dramatically as Tesla or Amazon or any of the other major, magnificent eight, except it's going to be better. It's totally accessible to anyone on earth with the internet.
Yeah. So do you think MicroStrategy is going to be up there? Do you think it's going to be part of the S&P 500 magnificent? Is it Mag 7 now or Mag 8? Maybe MicroStrategy makes it Mag 8 or Mag 9.
I think MicroStrategy is a unicorn all to itself. It will surpass all of those companies. I think it's just a matter of time. And every other company on earth will be looking at what they've done and think, how can we do the same thing?
Yeah.
I really can't comprehend how people aren't looking at what Michael Saylor does and trying to emulate that, move heaven and earth to do that. And what's interesting is, and Saylor says this, but I think whether it's a person, a corporation, or a government, there needs to be a level of desperation where people are willing to try this thing.
Yeah.
And until such point where you are absolutely desperate that you have to change your circumstances, no one will take action. And this is why the West is going to be last to Bitcoin. Yeah. Because it's complete apathy. We've got a great banking system. We've got Visa. We've got MasterCard. We can access any bank we want to. We've got a stock market. We've got great property rights. What do I need this thing for? And this is, a great leveler on a world basis that, for those countries that don't have access to great markets, don't have access to property rights, don't have access to technology platforms, they can just go and buy Bitcoin as a proxy for all of those things and outperform everything.
Yeah. Yeah. So I was actually thinking about something else. So you were talking about how Elon Musk and Jeff Bezos, they built the most powerful companies in the world. Like if you just look at what they've been doing, they built so much. They basically have all the money that they will ever need. I think what's going to happen on a Bitcoin standard is instead of investing in, let's say, the S&P 500, People are going to save in Bitcoin, and then eventually, because they'll have so much savings, they'll have so much money just sitting around. They're not going to have to pay for a massive house. They're not going to have to pay $3, $5, $10,000 monthly payment for a mortgage. I think what they're going to do is, well, I think what's going to happen is we're going to see a lot more entrepreneurs. We're going to see a lot more people who can take the risk of leaving their job to either, number one, become work optional, or number two, just have passive income coming in, because everybody has problems that they want to solve. I know every single person that I know, they have a problem, and they can probably think of a solution if they wanted to. If they could if they could be rewarded for it financially, then they would do it. 100% they would. But they're not being rewarded for it, because think about all the barriers to entry for any kind of business, right? With Bitcoin, I think things change, and then with the internet, it's just magnitudes bigger. What are your thoughts on that?
I think the internet represents an opportunity that no one ever had. And there's two ways of looking at this, two sides of the coin. You can say that there's more competition in the world than there ever has been. Times are harder, more debt, lower, harder to get credit, all the rest of it. Or alternatively, you can look at the fact that we have access to information that even pharaohs could never dream of. We've got the best living standards that we've ever had from a historical level, dating back since the beginning of time. I look at that and think I'd prefer to see a glass half full than half empty. And I think this is where the opportunity is for Bitcoin. And I look at Bitcoin and think, back to Bezos and Musk, they never sold their stock because they knew this thing was going up at 10, 20, 30, 40% per annum. So why would they sell that? And they waited long enough so that they never had to sell. They'd just finance their stock by margin lending, and then they'd take out whatever cash they needed. Now, that's what two people were able to achieve. Market caps of circa $3 to $4 trillion across both entities, or the three entities. What happens when 8 billion people get access to create their own Tesla, their own Amazon, by just saving in Bitcoin? What does that do to the price of Bitcoin when everyone realizes what this is, and there's a functioning credit market on the back of it that means no one has to sell?
Yeah. So don't you think that at some point they will have to, well, not sell, but maybe they'll have to exchange it directly for goods and services? Because at some point, I don't think merchants are going to want fiat.
I think we're there now. I think there are some people who are ahead of the curve who just refuse to take fiat. And I can tell you from a personal perspective with our business that you're familiar with, we don't accept fiat because, well, two reasons. Firstly, it's an inferior asset for an inferior way of being paid. But secondly, we've got clients across 15 different nationalities, countries, and I don't want to deal with the Forex headache. I'd rather just deal with getting paid in Bitcoin. And now I've got a single denomination that's based to the value that we deliver.
Yeah, and over time, you can. So the way that I see it, you can charge lower fees if you want to, because over time, the amount of Bitcoin that you get will just appreciate, and you're just keeping it as savings. And it's almost like you're getting a raise on your savings instead of getting a raise on your earnings, which, I mean, that's just a paradigm shift on its own, right? Because people are so used to seeing their wage going up, but their savings just lose value constantly, and that just changes everything. It flips the entire system on its head.
Yeah, it does. And here's the double bonus with what you just said. From a taxation perspective, if you get interest on your fiat, that's now taxable income. You're going to get tax on that. In Australia, the highest marginal tax rate is roughly 50 cents in the dollar. I think it's pretty similar in Canada. What happens is if you earn interest off your fiat, say you've got $1 million, you earn $50,000, and you're on the highest tax bracket, well, you haven't been paid 5% interest. You've received 5% interest. You've earned 50, but you've got to pay the government 25,000. So your real rate of return on that is 2.5%. Whereas Bitcoin just goes up in value, and it might go up 50% in value in 1 year. But you don't have to pay tax on that. That's the crazy thing. And then when you do sell it to pay, you have to pay tax on it. Your tax capital gains tax on it at capital gains tax rates, which in Australia are typically half what your income taxes are. So it's much more tax efficient too.
Yeah. Yeah, and you don't have to liquidate it. It's almost it just accumulates all of the time value. Instead of, let's say, for real estate, you have to sell essentially the time value. When you're renting your property out to someone, you're selling them the time value. You're letting them borrow it for that period of time, and you're forced to do that because otherwise the value of the property is going to be the expenses that are associated with the property will decrease the value of the property because you can't get cash flow from it. So you're forced to sell the time value. With Bitcoin, you're not,
Correct.
right?
And that's the mind-blowing thing. That's a
Yeah.
complete game changer.
Okay, I have one more question for you. I like asking this to all my guests, and then I want to go into the Bitcoin advisor and all that stuff. So the one question that I have for you, this is something that it stumps a lot of people because they have to think about it. But the question that I have is, what do you think the most important downstream effect of Bitcoin is? So let's say 20, 30 years from here, what do you think is going to happen in the world that will change how people live, improve their standard of living? Uh, I'll give you an example just to give you an idea of what I mean here. So the way that I see it, I really like to look at real estate and analyze how real estate values are going to drop over time. We're going to see the value of houses decrease. So eventually, a house in the US right now costs about 6-7 Bitcoin. That's going to be 1 Bitcoin or below, meaning that more and more people can buy houses, meaning that they can deal with the stability that comes with owning a house, meaning that they can build families. And then it keeps going, right? It increases the fertility rates. It increases the number of people who have families who are willing to have kids because they can afford it.
Yeah. I think that's a very deep answer. Mine would be very similar to that, but it would be summarized more succinctly in that it will return dignity to people.
Wow.
Yeah.
Can you
So
explain that?
at the moment with this fiat system that we're operating in, there is no dignity, no respect for anyone operating in this space because we are all rats in a race. We're trying to do our best to get as much fiat as we can, and it usually is at the expense of other people because fiat is fundamentally a zero-sum game. If I win, you lose. If you win, I lose. And there's no way to sugarcoat that. Whereas Bitcoin has the ability to return dignity to people because they then have a choice. They can work as hard as they want. It probably returns to the forefront the number one rule in finance, which is spend less than you earn. That is a precursor for having money to invest in the stuff that we talk about. But when you can save money with your Bitcoin and you can preserve that purchasing power through time, that returns dignity to all layers of society. It returns, there are a whole host of jobs that some people look down on and think, oh, I wouldn't be caught dead doing that. And my father said to me, the only job to be ashamed of is a job done poorly. Mm-hmm. And I think about that and I think this allows everyone, regardless of what they're doing in society, to have dignity and to build a future for themselves because all they need to do is save money and let time do the compounding for them so that they're in a position to do what they want to. And, you talked about building families, lowering cost of housing. All of those are downstream of having a return to dignity and the ability to save your money without all of the headspace required to preserve it because everyone's trying to nickel and dime you and take it from you.
Yeah, in this system, everybody's competing with one another. On a Bitcoin standard, I think everybody's going to be working together.
Yeah.
Right?
Big time.
And okay, I think that actually leads us into the question that I wanted to ask you about your business. So, your quote from your dad: "The only job that you should be ashamed of is one that's done poorly." So you do a very good job with offering custodian solution for Bitcoin. Can you explain what the Bitcoin Advisor does?
Sure thing, and thanks for bringing that up. In short, we help people safely secure their Bitcoin. So for those who haven't purchased Bitcoin, we'll help you basically purchase it and we'll help you secure it. So most importantly, you can self-custody your Bitcoin without the fear or concern that you're going to lose your Bitcoin or you'll forget your seed words or you'll have a $5 wrench attack where someone wants to beat you for your Bitcoin. We set it up in a way whereby there's no single point of failure. clients can self-custody their Bitcoin. They've got full control, full autonomy of their Bitcoin. And most importantly, if for whatever reason they're not to wake up tomorrow, the sacrifices that they've made to buy Bitcoin and preserve it are not going to be lost. Their loved ones, their spouse, their children, beneficiaries, whoever that might be, are going to be able to benefit from it because we put that into a collaborative security protocol that ensures that no matter what happens to the clients, that their beneficiaries will benefit from their sacrifice.
So it's essentially like an estate plan.
Yes, exactly right. And this is where one of the things that we do for clients is a pragmatic estate plan, because estate planning can be broken down into two components. There's the legal component, which is going to be determined by what jurisdiction you're in, and that has a whole host of legal ramifications that are foisted upon you. But then there's the pragmatic estate plan and the recovery of your Bitcoin. And sadly, whether we like it or not, the legal fraternity across the globe is going to figure out that cryptography trumps the legal system. Because if you don't have the private key, there's no way that you can recover your Bitcoin, regardless of what the last will and testament said, regardless of a legal decree or a government mandate. There's nothing that anyone can do to recover your Bitcoin unless you've got the pragmatic recovery protocol in place or a private key to access that. And this is where we work hand in hand with estate planners globally to ensure that we've got, I guess, a synergistic relationship between a pragmatic estate plan to recover your Bitcoin and the legal document of recovering it. So there are two components to that.
I think one of the things that most people are actually really afraid of before they buy Bitcoin is the storage part of it. And I know so in our conversations, you've told me so many stories about people you've talked to, high net worth millionaires, a couple of billionaires, where you've talked to them and you've convinced them that if you buy Bitcoin and you put it in the wrong way, if you store it in the wrong way, you're probably going to lose your Bitcoin. You're never going to be able to recover it. So what do you think are some of the things that the Bitcoin advisor can help people with let's say making sure that they can recover their Bitcoin in 10 years if they lose their private key? How would that work? I know you've worked with a couple of widows where you've helped them recover their Bitcoin. Can you explain like how they would go through that process? Let's say if they were to lose their private key and they need you to help them move their Bitcoin.
We're in a very unique situation. I'm very grateful for the clients that I have and I've been able to look after, and extremely proud of the fact that despite the fact that we've been through 3 probates, so sadly we've had 3 clients pass away who were self-custodying their Bitcoin, we have not lost a single Satoshi. So every beneficiary, every spouse got every single Bitcoin that was owed to them or that was self-custodied by their partner. And how we're able to do this is we do this in a collaborative security protocol. So what that means, without getting into fancy tech talk, we have multiple keys for a client's vault. The client controls all of those keys. And in the event that they lose one of the 3 keys, we can still, with the other keys that are available, sign a transaction to move that Bitcoin to wherever they need it to go to. And therein lies the beauty of it. And to sort of give you the genesis of how this happened, when we first started advising clients on Bitcoin back in 2016, I was terrified about leaving coins on exchange because we'd had multiple exchanges blow up. And at the same time, I was terrified to give a client basically a little USB stick and let them walk out with millions of dollars of Bitcoin on their USB stick. That to me seemed crazy. So what we were able to do when multi-sig provisioning came in, probably around 2016, but really around 2017, 2018, was develop a process whereby the client has the key, the multi-sig provider has a key, and we have a key as well. So the beauty of that is that the client can do whatever they wish. They can give the key away, they can lose it or not. And regardless of what the client does, they're still going to be able to recover their key. And that is the magic of the system. No matter what happens in that process, you're going to be able to get your Bitcoin back, no matter how badly you muck it up.
Yeah, I just found this graphic quickly on Google. This is basically a multi-sig transaction. So in this case, let's say this is the person at the bottom there. I don't know if you can see my mouse.
I
This
can.
would be the customer.
Yep.
I guess this would be Bitcoin advisor, and then this would be another collaborative partner, I guess.
Correct. So it might be Unchained or Thea.
Yeah.
Keep it, Nunchuck, Casa. Yeah.
Yeah. Yeah. Okay. Perfect.
And so
no, go ahead.
I was going to say, what's interesting is the client controls all three of those key holders.
Yeah.
And that's the beauty of it, but they're only responsible for one of the keys.
Yeah. So they can reach out to each of the key holders, and they can get them to like move their Bitcoin if they need to.
Correct. And we've had two very interesting scenarios where that proved really helpful. We had one client reach out to us from the Antarctic. He was on a boat cruising around the Antarctica, sorry, I should say, not the Arctic, and he needed to move Bitcoin. We were able to do that by using not his key, but the two other key holders. Wow. And then we had a client literally just a few months ago was cruising around the Mediterranean. They needed to meet a tax deadline. They didn't have their key with them, and no one travels with a key. That seems odd to do. But they really needed to move that Bitcoin in a really expedited fashion to the tune of 2 days. And we were able to get that transaction done and dusted in time, which would never have been able to be done unless we were operating in that protocol.
Yeah. The way that I see it, I think this is. I know my audience is going to be wondering, oh, what would Rajat do? So the way that I see it, I think something like collaborative custody is great because there's no single point of failure. But I also think that there should be. So let's say if somebody had a whole stash of Bitcoin, let's say they had a certain number of Bitcoin, I think that it would also be smart to have some in self custody. Would you agree?
It's horses for courses, and I can tell you what I do. I look at my stack, and basically I practice what I preach. My Bitcoin is in a collaborative security protocol. It's sitting in a one of three or two of three multi-sig arrangement, and that's to me the best outcome that I can possibly achieve. So I don't dilute what I believe to be the best outcome. Having said that, I want to be really respectful of other people have got different risk measures. They've got different considerations to take into consideration when distributing risk from a self-custody perspective. And one of my favorite sayings, particularly with Bitcoin, is you do you. And there's no solutions, only trade-offs. So you need to figure out, well, do I want to hold some? And I completely understand there's multitudes of reasons why people would want to self-custody their Bitcoin, a little bit of it, a lot of it. It's choose your own adventure. And this is where, sadly, there is no one size fits all. All I know is that, we'll say with the Bitcoin Advisor and what we've been able to achieve there, we allow people to sleep easy at night because we have a perfect track record and we have not lost a single Satoshi. If that sounds appealing to you, then we'd love to talk to you about delivering that service to you. And it really just is a matter of then thinking about, well, how much of your stack do you want to put in? Is it, am I going to sleep easy knowing that half of my stack's there? Or do I need to have all of it because I don't want to lose a single Satoshi? Or, you know what, I've got a huge stack, I'll give you 10% of it because that's still enough to make things good if I lose 90% of my stack. So horses for courses, but happy to chat with anyone to discuss what's appropriate.
Absolutely. So what I'll do is I'll just I'll put a link in the description there. So if anybody does want to speak with Bitcoin Advisor Peter and his team, then go ahead and book a meeting in that call. They'll be able to help you out. Okay, so I want to wrap this up. I want to be respectful of your time here. I really appreciate your time, Peter. I really do. I want to ask you, do you have any last words of wisdom for my audience? I know you have tons of words of wisdom. What are the top things that come to mind here?
Oh, there's a lot. I think from what I know of your audience, they will be exceptionally well educated, quite sophisticated. They will have a bent to traditional investments, typically stocks, because you do such a brilliant job, and obviously your education and training in that capacity. I would say look at individual investments and then assess that relative to Bitcoin on a one-by-one basis. So if you're holding a portfolio of 20 stocks, have a look through how each of those stocks compares to Bitcoin. And I think what will end up happening is you will just start allocating more and more capital to Bitcoin. Because from my point of view and the work I've done, I look at Bitcoin and think, my expectation is we're going to have a 50% risk-free return on Bitcoin for the next 10 years. And when I compare that to other investments relative to Bitcoin being risk-free, and I know that those two words have got some loaded connotations to it, but relative to other investments, I need to get a 30% premium on my 50% just to entice me to invest in an alternative to Bitcoin. And I look at just about any stock portfolio, any bond portfolio, any property portfolio, and think, I really need you to buy more Bitcoin, is typically what ends up happening when you compare one-to-one.
Yeah, I
We're
think
all short Bitcoin.
That's perfect. I think that's the greatest advice you can give somebody. Study Bitcoin, buy Bitcoin, put more of your wealth into it, because over time this thing is, we're not trying to get you to buy something that we think is going to go down in value. We have done the research, we've put in the time, we know where this is going. It may sound like, oh, these guys have a crystal ball, but no, that's not it. It's about facts versus belief. So with real estate, for example, people believe that, oh, real estate properties are going to go up in value forever. They don't know that for sure, right?
No.
With Bitcoin, we know for sure that Bitcoin's price is going to go up forever, because fiat has no bottom, Bitcoin has no top. There's unlimited fiat that can be printed, and if you own Bitcoin, it's the best proxy to earn more fiat if that's what you want.
Yeah. That's, I just haven't seen an investment like it. And probably you've stared at investments for years and years. I think I'd be approaching close to 20,000 hours staring at Bitcoin, talking about Bitcoin and trying to understand it. And maybe one question for you with the study and the research that you've done. I look at Bitcoin, the more I look at it, the more I like it. Is there any other investment that you've looked at and studied, and the more you've studied it, the more you've liked it? To me, this is the curious thing about Bitcoin. The more I study an investment, typically the less I like it, because I see the warts and all on the investment. I'm like, oh, what if this happens? What if that happens? What if that roof falls in? Start picking apart why I don't like it. But the more I look at Bitcoin, I'm like, oh, it's the total opposite to that. I'm just wondering if you've had that case.
I think MicroStrategy is getting to that point. I think the more that I look at it, the more that I see what they're doing. You were mentioning how you're liquidating the house and you're going to be buying MicroStrategy and Bitcoin, but I think MicroStrategy may be that asset. I mean, there is some risk associated where, let's say, MicroStrategy can have their Bitcoin confiscated from them. They could maybe if Bitcoin goes down 90% and just stays there for the next 5 years. I don't think that's going to happen. The chances of that are very low, but if that happens, then maybe they may not be able to service their debt, right? And I'm not sure how that would work. I haven't done the deep dive on that yet, but I think as I learn more about MicroStrategy, as I learn more about their playbook, it's hard not to think that MicroStrategy is going to go up forever, along with Bitcoin, assuming that Bitcoin will go up forever. But I think that's the only. Other than that, let's say gold, for example. I can't. The more I study gold, the more confused I am as to why people even want it.
Yeah.
Right.
I agree. I agree.
The more I study the S&P 500, the more I realize that there's so many risks here that people don't even see. The S&P 500 could go to zero. People haven't even thought of that. Like, that's one of the most debated posts that I put up. So whenever I say, oh, the S&P 500 can go to zero, everybody says, no, it can't. It's impossible, but it could. And I think Bitcoin could make that happen. But the more I study Bitcoin, just like you, it's at this point, I'm studying it to see where it could go wrong.
Yeah.
And I can't find a valid reason for why it would go to zero.
That's ironically where I spend most of my time, is trying to figure out what I've missed. Because I've made the bet, I've looked at what it is, I'm convinced over the next 10, 20 years, nothing will outperform it. So now what I really want to know is what what am I missing with my assumptions? What have I missed with my understanding? And what have I missed from a risk perspective that would undermine the position and the assumptions that I made?
Yeah. Yeah, I think that's the key. That's once you really dive deep into an asset, that's what you want to really know. Okay, so like I said, I want to be respectful of your time. Thank you so much, Peter. I really appreciate it. Where can my audience find you? Do you post online or anything?
Yes, you can find me on X. It's at Peter BTC Advisor with an ER.
Awesome.
Alternatively, you can just look up thebitcoinadvisor.com or just Google Bitcoin Advisor. We should be the first website that pops up. If anyone has any questions, reach out to me. Emails and DMs are open. So I'd love to help if you've got any questions in that capacity. And I'd just like to say thank you for all that you do, Rajat. It's fun watching your success, and it's great learning from you. So I really appreciate what you do.
I appreciate it, Peter. I'm going to leave your links in the description below. I think people will be very interested in talking to you, reaching out to you. I definitely think that's going to happen. So thank you so much, Peter. Appreciate your time.